It's official. The Social Security Administration just confirmed a 2.8% cost of living adjustment for 2026, and this means real money heading to your account starting January. If you're one of the 71 million Americans receiving Social Security benefits, you need to know exactly what this increase means for your monthly payment. Here's what's happening. The average retirement benefit is jumping from approximately $2.8 to around $264 per month. That's an extra $56 in your pocket every single month. For some recipients, depending on your current benefit amount, this could mean even more. And if you're receiving Supplemental Security Income, your increased payment starts even earlier on December 31st, 2025. But here's what most people don't realize. Your actual take-home increase might be different due to Medicare Part B premium adjustments. The Medicare premium is expected to rise to $206.50 for 2026, which gets automatically deducted from your Social Security check. However, the Hold Harmless provision protects most beneficiaries from losing their entire COLA increase. Your personalized COLA notice is already being sent out. You can check your exact new payment amount right now through your My Social Security account online, or you'll receive a simplified one-page notice in the mail this December with your specific dollar amounts and payment dates. In this video, I'm breaking down exactly how much you will receive when the payments start and 3 critical things you need to do right now to maximize this increase. If you want to know your exact new payment amount and how to prepare, smash that like button and let's dive in. Now let me tell you something that not enough people are talking about when it comes to this Social Security increase. Yes, we're all celebrating the fact that there's more money coming, but understanding the full picture is what separates those who just collect their checks from those who actually maximize every single dollar they're entitled to receive. And trust me, by the end of this video, you're going to know exactly where you stand and what actions you need to take before we hit January. So let's start with the foundation here. The Social Security Administration bases this annual cost of living adjustment on something called the Consumer Price Index for urban wage earners and clerical workers. That's a mouthful, so everyone just calls it the CPI-W. What the SSA does is compare the average CPI-W numbers from July through September of 2024 with the same 3-month period in 2025. The difference between those two periods determines your COLA percentage. This year, that calculation landed us at exactly 2.8% for 2026, which is actually higher than the 2.5% we saw for 2025, but lower than some of the bigger increases we experienced when inflation was really running hot in previous years. Here's what that actually means for your wallet. If you're receiving the average retirement benefit right now, which sits at about $2,008 per month, you're looking at an increase to roughly $2,064 starting in January. That's your $56 monthly boost. But I want to be crystal clear about something here because this is where a lot of confusion happens. Not everyone gets the average amount. Your specific increase depends entirely on what you're currently receiving. If you're getting more than average right now, your dollar increase will be proportionally higher. If you're receiving less, it'll be proportionally lower. The percentage stays the same at 2.8%, but the actual dollar amount varies from person to person. Now let's talk about something that catches people off guard every single year, and that's the Medicare Part B premium situation. Starting in January 2026, the standard Medicare Part B premium is jumping from $185 per month all the way up to $202.90. That's an increase of $17.90 every single month. For most Social Security recipients who have Medicare, this premium gets automatically deducted from your check before you even see it. So when you do the math, that $56 average COLA increase minus the $17.90 Medicare premium hike leaves you with only about $38 of actual new money in your pocket each month. That's still better than nothing, but it's definitely not the full $56 that the headlines are promoting. Here's where things get interesting though. And this is information that could literally save you money if you pay attention. There's something called the Hold Harmless provision that protects most Social Security beneficiaries from having their net benefit decrease because of Medicare premium increases. What this means in plain English is that if the Medicare premium goes up by more than your COLA increase, The government can't reduce your actual Social Security check below what you were getting the previous year. This protection applies to most people, but not everyone. If you're a new Medicare enrollee, if you're a high-income beneficiary paying income-related monthly adjustment amounts, if you have Medicare Part A but not Part B, or if your premiums aren't being deducted from your Social Security check, then this hold harmless provision doesn't apply to you. For everyone else, though, it's a safety net that ensures you're not actually going backwards financially. Let me break down the timeline for when you're going to see these changes because timing matters when you're planning your budget. For regular Social Security retirement, survivors, and disability benefits, your increased payment begins with the check you receive in January 2026. Now remember, Social Security pays benefits the month after they're earned, so your January payment actually arrives in early February depending on your birthday. But here's something really important for SSI recipients. If you're receiving Supplemental Security Income, you actually get your increase earlier. Your first boosted payment arrives on December 31st, 2025. The reason for this early payment is because January 1st is a federal holiday, and the SSA always moves payments up when they would normally fall on a weekend or holiday. The SSA is sending out personalized COLA notices to everyone affected, and you have two ways to receive this information. If you've set up your My Social Security account online and opted for electronic delivery, your notice will be available in your message center starting in late November. This online method is not only faster but also more secure than waiting for mail. If you haven't opted for electronic delivery, don't worry. You'll receive a physical notice in the mail throughout December. This notice will show your current benefit amount, your new benefit amount starting in January, and for Medicare enrollees, it will also show your new Part B premium deduction. I strongly recommend creating that online account if you haven't already because it gives you instant access to all your Social Security information anytime you need it. Now let's talk about the maximum benefits, because this is where things get really interesting for high earners. For 2026, the absolute maximum Social Security retirement benefit is increasing to $5,251 per month. Let me put that in perspective for you. That's $63,012 per year just from Social Security alone. But before you get too excited, understand that reaching this maximum benefit requires meeting some extremely specific and challenging criteria. First, you need to have worked for at least 35 years. That part is actually pretty straightforward for most people. But here's where it gets tough. You need to have earned at or above the Social Security taxable maximum in all 35 of those years. For 2026, that taxable maximum is $184,500. Back when you might have started your career 35 years ago in 1991, that maximum was only $53,400. So you would have needed to consistently earn at the top of the income scale throughout your entire career, with your earnings growing along with the national wage index year after year. But wait, there's more to maxing out your benefit. Even if you earned at the maximum for 35 years, you also have to delay claiming your benefits until age 70. This is where a lot of high earners make a critical mistake. They retire at 62 or even at their full retirement age of 67, not realizing that waiting until 70 increases their monthly payment by a huge amount. For every year you delay past your full retirement age up until 70, you get delayed retirement credits that boost your benefit by 8% annually. That's not 8% total, that's 8% per year. So if your full retirement age is 67 and you wait until 70, you're looking at a 24% increase over your full retirement age benefit. When you combine that with a maxed out earnings history, that's how you reach that $5,251 maximum. Now I know most people watching this aren't going to hit that maximum benefit, and that's completely okay. The reality is that only about 6% of workers earn above the taxable maximum in any given year, and even fewer maintain that level of earnings for 35 consecutive years while also having the financial flexibility to wait until age 70 to claim. But understanding how the maximum works helps you see where you fall in the spectrum and what changes might help you increase your own benefit. Let's talk about something that affects a lot of people who are either still working or planning to work while collecting benefits. The earnings limit is changing for 2026, and this could impact your strategy. If you're under your full retirement age for the entire year of 2026, the earnings limit increases to $24,480. Here's how this works. For every $2 you earn above that limit, the Social Security Administration will withhold $1 from your benefits. So if you earn $10,000 over that limit, they'll reduce your annual benefits by $5,000. This isn't a permanent loss, though. Once you reach full retirement age, the SSA recalculates your benefit and gives you credit for those months when your benefit was reduced or withheld. If you're reaching your full retirement age during 2026, you get a higher earnings limit of $65,160, and the reduction formula is more favorable. For every $3 you earn above that limit, only $1 gets withheld from your benefits. And here's the best part. Once you actually hit your full retirement age, the earnings limit disappears completely. You can earn $1 million a year if you want, and Social Security won't touch your benefits at all. This is why understanding your full retirement age is so critical to planning your work and benefit strategy. There's another change coming that might seem small but could affect millions of people, and that's the increase in how much you need to earn to get Social Security credits. In 2026, you'll need to earn $1,890 to get one Social Security credit, and you can earn up to 4 credits per year. That means you'll need $7,560 in earnings throughout 2026 to max out your 4 credits. You need 40 total credits to qualify for retirement benefits, which typically takes about 10 years of work. This matters especially for younger workers who might be in and out of the workforce, self-employed individuals with variable income, or anyone who took extended breaks from working and is now trying to qualify for benefits. Here's something most people don't think about until tax time rolls around, but it could actually save you money starting in 2026. There's been a change in the standard deduction amounts that could affect whether you owe taxes on your Social Security benefits. The way it works now, if your combined income, which includes your adjusted gross income, plus any non-taxable interest plus half of your Social Security benefits exceeds certain thresholds, then a portion of your Social Security becomes taxable. For single filers, if your combined income is between $25,000 and $34,000, up to 50% of your benefits might be taxable. Above $34,000, up to 85% could be taxable. For married couples filing jointly, those thresholds are $32,000 to $44,000 for the 50% level, and above $44,000 for the 85% level. What's changing is that the increased standard deduction for 2026 might lower some people's taxable income enough that they end up owing less tax on their Social Security benefits, or possibly no tax at all. Let me share 3 critical actions you need to take right now to make sure you're maximizing this increase. First, log into your My Social Security account and verify all your information is correct. Check that your address is current, make sure your bank account information for direct deposit is accurate, and confirm that your email address is up to date so you receive important notices. If you don't have an account yet, create one today at ssa.gov, My Account. It takes about 10 minutes and gives you access to your complete Social Security history and benefit information. Second, review your Medicare coverage during this enrollment period. Even though the deadline for 2026 coverage has passed for most people, understanding your current plan and what it costs helps you budget for next year. Look at your Part D prescription drug coverage especially, because premiums and covered medications can change from year to year. If you're paying for a Medicare supplement plan or Medigap policy, check whether your premium is increasing for next year and shop around if needed. These private insurance premiums aren't protected by any hold harmless provisions, so they can increase regardless of your COLA. Third, recalculate your monthly budget for 2026. Take your current Social Security benefit, add the 2.8% increase, then subtract your new Medicare Part B premium if applicable. That net number is what you'll actually have to work with. Then look at your other regular expenses and see where everything stands. Are there subscriptions you can cancel? Are there expenses that have increased beyond what your COLA covers? This is the time to make those adjustments, so you're not caught off guard in January. Here's the bottom line that I want you to walk away with today. The 2.8% COLA for 2026 is real money, and for most recipients, it will result in a net increase even after Medicare premiums. But maximizing that increase requires understanding all the moving parts, from Medicare costs to earnings limits to tax implications. The beneficiaries who come out ahead are the ones who take the time to understand their complete financial picture and make informed decisions based on accurate information. That's exactly what we've covered here today, and now you have all the knowledge you need to enter 2026 with confidence about your Social Security benefits. If this video helped you understand the changes coming to your Social Security check, make sure you hit that like button so more people can find this information. Drop a comment below and let me know what your biggest question is about these changes, and I'll do my best to answer it. And if you haven't already, subscribe to the channel because we're going to keep covering everything you need to know about Social Security, Medicare, retirement planning, and making your money work harder for you in your golden years. Thanks for watching, and I'll see you in the next video.